Hi everyone, good afternoon. Welcome back. And today we had a very good session. Nifty at 23,400, 1.1% up. And to decode more about the market, we have Mr. Arjit Garg, a SEBI-registered research analyst. Arjit, thank you so much for your time. Thank you so much for joining us.
Hi, Pradhaman. Thank you so much for having me, and a very warm evening to all the viewers today.
Thank you. So, Arjit, please tell us what do you think about the market today? We saw a beautiful rally today.
Absolutely, a beautiful day in the markets, and exactly as we discussed in the last session on Friday, I remember we marked the key level of 23,000. We were very sure that we can see a short covering or a slight up move from that level, and that is exactly that happened in the market today. We saw an intraday low of 22,955, very close to 23,000, and right from that level we saw a strong rally of at least 400 points, throwing Nifty from the negative territory to a gain of 1.11% or 257 points up. Same was the case with Nifty 50. Same was the case with Sensex. We saw a huge rally from 74,000 levels, and that too closed with a gain of approximately 1,000 points. So I believe awesome rally, awesome day, strong short covering, but this is not the time to buy the markets. We still are in the sell on rise concept in the Nifty. The sell on rise strategy is still the one which is going to help us make money in the index right now.
Okay, okay. So, furthermore, what would be the major levels? We discussed this previously, but if you can give a recap of that.
Sure. The important level again is 23,500, 23,350, 23,000, and 22,800 on the extreme side. See, if sell on rise continues, what will happen right now? A small trailer we have already seen in the last hour in the market. We went up, we touched a high of 23,500, and exactly wahan se selling came in, and the next candle was a red color candle, closed exactly near our level 23,300. Now 23,500 and 23,300, these two are very important levels. What can happen in the next trading session, which is tomorrow? Option number one, we can either open sideways and we can trade in this tight range before either moving up or down. Second option, what can happen is we'll open somewhere close to the same level 23,300, and we'll continue our rally downside till 23,000. These are the two things that can happen. Third option is, in case we see a very good development or some improvements in the geopolitical tensions which are currently there in the market, agar there is something positive around it, then only then we'll see a rally which will cross 23,500, and we can see a rally up till 23,800 only in that case. So far, we do not have anything positive in the markets till now. So what we are expecting right now is markets to either stay stuck in this 150 points, or we can see a retesting of 23,000 in the next upcoming sessions.
Got it, got it. And tomorrow, in fact, is expiry as well.
Exactly, and expiry days are known to be extremely volatile. So even if the market is sideways, the best way to make money in a on an expiry day in sideways market is by option selling. So once we talk about the sector and the broader market talk, later at the end we can talk about the key levels for an option seller for tomorrow's market.
Sure, sure, definitely. So let's look at the sectors then. So which one sector performed well today and which one were still down?
Sure. Here's the broad sector overview. We can see the top losing sector in today's market was oil and gas and realty with a loss of 1.5, 1.7%, followed by pharma, healthcare, and the other Nifty 500 healthcare. So we can see pharma and healthcare already we saw a huge rally over there. Glenmark, Dr. Reddy's, all of our key picks from the previous sessions performed extremely well in the past sessions, and today was the profit booking day for all of these sectors. Oil and gas, we already know what's going on with crude and natural gas. Here's a chart of natural gas. We can see we touched the level of close to 308, 309, which was our earlier target for natural gas, as we discussed last week on Monday and Tuesday. We've hit the target there, and from there, we can see a strong, long winding here. So a short move here in natural gas. Also, if we see crude futures on MCX, uh, just a second. Yeah, I can load the crude futures, and we'll see a rally over here also. Sideways rally over here, short down move over in the crude oil we can see in Friday session as well as in today. So I think these are the two levels, two crucial reasons I can say, which are driving oil and gas stocks down. Realty to again, because there everything is negative, the sentiments are negative, everything is bad, so realty is performing not very good. But yeah, broadly, these are the sectors and the top sectors, top stocks which are there in the markets, and we can see a huge potential was already there in the non-energy minerals, which is Ultra Simco. We can see stocks like Tata Steel, Grasim, auto stocks. May we already talked about Mahindra and Mahindra. I remember we talked about auto stocks last Thursday. So people, we were discussing apart from pharma and healthcare, what are the top stocks, top sectors we need to focus on. So we talked about how M&M is really working on their fundamentals, their revenue, and their strategy to bring the company up in the in the overall sector, how they're working on it and how everything is going in support of M&M. That is something which is showing up in the charts right now, and we can see M&M is up 3.58% today. So I believe these are the sectors that we should look at. Auto, farm and healthcare are long gone. Oil and gas is gone. Cement and auto sector is the next sector we have to watch in the next stocks that we have to watch for the next couple of days and for a couple of sessions coming forward.
Got it, got it. Cement and auto. So, Arjit, actually, in fact, when you were mentioning about the natural gas, you use the word long unwinding. And in fact, we can start a series like this way as well, where you introduce a word and you explain to the viewers as well. So, can we go back to the natural gas and explain the word long unwinding for our users?
Sure. So let me just quickly load natural gas futures. So see, these are some terms that it drives option buyers and option traders crazy. Short covering and long unwinding. See, these are two very similar terms, and see, it might sound very complicated, but it's very simple. Short covering, which means shorts are being covered now. Short matlab when people assume or people want the market to go down, that's exactly when people go short. When people go long, they expect the markets to go very high and they expect the market to perform well. When we talk about short covering, that means shorts are being covered, which means जिन लोगों ने short position लिए थे, people who entered the short contracts are now exiting the short contracts and now they want the markets to go up. So they're selling their short contracts, they're getting rid of it. That is short covering. Long unwinding is when you start unwinding your long positions. You're long, you have bought your long positions. Now you want the markets to go up, right? When you start unwinding your position, you start selling your long positions, you want the market to fall down from here. That is what long unwinding is. That is why I use the word long unwinding, and then I realized, okay, 90% users might not understand that. So we can also replace the words with a shortfall, maybe a downfall. These are simpler terms that we can replace long unwinding in short covering.
Perfect. No, but the explanation was, very simple, so that most users they'll be able to understand as well. So, going forward, let's cover these word series as well in between our live session.
Absolutely, absolutely. And I believe these are the words and terminologies that we have to work on. So, like the people who are trading in the markets every day, they can understand these terminologies and we can simplify it for them. So, stock market is not a gambling game for
Correct.
them anymore. They can really understand the movement and they can trade successfully and profitably in the markets.
Correct. Correct. 100%. So, Ajit, you also wanted to ask you whether how closely do you follow the global cues, be it the DAX or the US markets, when it comes to the trading in the Indian markets? Do you generally follow it?
Yes, absolutely. See, one of the, I would say, the most biggest trigger for Indian markets is how the US markets perform. See, US, if you talk about the Indian timings, according to our perspective, during the day, we're trading in our Indian markets, right? But when it's night time for us, when 90% of the Indians are sleeping, that's when the US markets open and they trade when we are sleeping, when we're having our dinner, when we're relaxing at the night time. That's the day for US markets, and that's the time US markets really perform. So based on how US markets are doing, that that maybe the green or the red part, that is the sentiment that is carried forward in the next day to the Asian market, and Asian market sentiments are then carried forward to the Indian market. So I believe global markets are very important to track, even if you're trading commodities or stocks or derivatives or currency, anything. If you're associated with any segment of the Indian market, you have to track global markets. US markets are number one on your priority list. They should always be there. Apart from US markets, you should also track Asian markets. Now, Asian may you don't have to track all of the countries. Just a couple of countries like Japan is major, Korea is major, and Indonesia is major. So if you just track, and of course China. So China, Korea, Japan. If you track these three countries in the Asian market and you cover the US markets before getting into Indian markets, you're already well prepared for what's coming next. You can predict very well. If you mix all of this with option data and your own chart analysis in the Indian markets, you'll do wonders in the Indian stock market trading.
Got it. Got it. So, moving ahead, you also mentioned like this week you're not particularly looking to trade in the market, but also do you have any stocks that you would like to suggest to our viewers?
Yes, we already discussed the stocks. The stocks are M&M number one, the top auto sector that we have to discuss. I think people should add this in their portfolio to capture the move successfully. See, we talked about pharma, we talked about healthcare in the previous session, previous week. The
Yes.
entire week we were shouting, please focus on pharma and healthcare. I believe now is the time then we should shout, please start looking at auto and cement sector. People have really went very hard on these sectors, on these stocks. They sold auto stocks like anything, like there was no tomorrow. And this is exactly what we can see on M&M charts. Like we were somewhere around 3,700 in February, and now we're down to 3,000 rupees. So I believe a 700 point fall in just a month, that's too much for auto sector. So from here, from current levels, we can see a move up till 3,175. If that is sustained, we can see an up move till 3,300 or 3,297 to be accurate. So these are some levels we can see in Mahindra and Mahindra. And the other stock that we can look at is Ultratech Cement. Again, cement sector has not been doing very well. We all know how cement sector has been doing for past 1 year. Revenue was falling, profits were being squeezed, and a lot of acquisitions were happening. So this entirely threw the cement sector in a question mark. Like, there's no tomorrow for it. People don't know what we should predict, what we should look out for cement sectors. So now I think valuations has corrected a lot, and from here we can see Ultratech Cement at 11,700 and 12,300 in the upcoming trading sessions. Now remember, these levels will not come in just 1 or 2 days. These are levels at least 5 to 7% from here. So from here, you can expect at least say 4 or 5 days of rally. That is when you'll see these numbers. So do not expect these numbers to come in just tomorrow or just day after tomorrow. This is the investing game in equity market. So you have to stay invested, look at the right stocks, mark the right levels, and this is how you exactly earn money and earn profits by trading in the stocks.
Got it. Got it. Now, before we close today's session, we would like to, take one note from you. What most retail investors fail in the market? What are the main mistakes that they would do generally?
See, in today's market, if we see, like if I can just load Nifty's chart here, we can see 23,000, 23,100. This level was the level where people were confused, like what is going to happen next. They would buy put or they would try to trade options, they would trade futures, and they were still unsure of what to do. They would have long stop losses far from their current market price. They would have targets long from their current market price. They don't know where to put the targets, they don't know where to put stop loss. And right as the market really gave a breakout here, this huge candle of 400 points, this is where the patience of the trader gets tested. See, a lot of traders are very impatient in the market. वो ट्रेड लेंगे, ट्रेड लेते ही they immediately they want profit, either profit or loss. They don't want to be in the trade for long. But that this is the exact problem, right? You enter a trade and you want quick money, quick profits. But that's not how markets work. Markets really test your patience. So being patient is something that that is very important. And I believe traders, investors, especially the new ones, people who have entered after 2021-22 rally, I believe these investors need to learn how to be patient. So be patient, mark the levels, trade the levels correctly, and that is exactly how you make money out of the markets.
Got it. Great session, Ajit. Thank you so much. And thank you so much, everyone, for joining today's live. We'll reconnect tomorrow exactly at 4 p.m. Thank you.
Thank you.